Hey YouTube, this is Zach with Achilles Financial, and today we have a little bit different of a video. There is a lot of moving going on in terms of prices, in terms of earnings. We saw another huge day of earnings, and tomorrow is arguably one of the largest days in the year concerning earnings because we have Apple, Google, Facebook all announcing earnings tomorrow. And not only is that it's super important, but during the same time, they are having conversations in terms of antitrust lawsuits or just explaining what they're doing in front of Congress. And that started today. So there's a lot going on with that. I also want to highlight something that we talked about yesterday, which is we essentially walked through the fact that Jerome Powell, the head of the Federal Reserve, is announcing today, or they walked through today, the plan and what they're going to be doing going forward. And the stock that I am watching to kind of give an indicator is the PowerShares DB US Dollar Index Bullish ETF. What this stock is essentially we are looking at where do we expect the dollar to go and what is the expectation of the value of the dollar. And as you can see, over the better part of the past 3 months, we've lost a good percentage. We only see $1.73, but the US dollar doesn't exactly move a lot. It's not exactly a volatile trade. And as you can see, I was actually able to buy UUP $19 puts. I bought them for 5 cents a share. I just got 4 of them. The reason for that, and to explain my reasoning behind this, is we are looking at a US dollar that is currently being held up based off of the strength of the United States government saying that the dollar is doing a good job. And one of the things that I would highlight is when we look at these safe havens in terms of broader global questioning or what's going on, the dollar tends to hold up really well because it's a safe haven. That being said, the value of the dollar, as you can see, again, here's the safe haven point right here. But now you're seeing that it keeps dropping and dropping. Again, we're at a 1-year low right now. And that's largely being driven by the fact that the Fed has essentially pumped a lot of money into the economy. The government continues to spend. And depending on what the status of the new bill ends up being, the one that Republicans in the Senate put forward, which I don't think is going to essentially go forward in its current iteration, is the only way that we can fund a recovery right now is going to be through inflation, because we're looking at anywhere between $4 to as much as $7 trillion of budget deficit this year. And that's not including anything that may continue into next year. So that being said, the dollar, again, the more and more and more that goes into this, the additional depreciation that we're going to see here. So on the reverse side of that, if you look at gold stocks, then what you're going to see is that those stocks have been doing just better and better and better. And this was really the price jump we saw, and this is a penny stock. But if you just look at gold, you look at silver, we're seeing all-time highs right now, and that is not unintentional. It is just they continue to go higher and higher. This is probably a better indicator. So gold is a true safe haven material. It is continuing to appreciate. It is continuing to do better, and just goes up and up. And I don't think that this is going to be the end all be all. Just look at the 5-year chart and how much this has gone up. Again, this is a material that tends not to move, but it's something that you can peg value against, whereas the US dollar doesn't necessarily hold that same type of value right now, depending on what we're going to see going forward. So this is all just a broader macroeconomics discussion, but I just want to highlight that people are unsure of their value going forward for the US dollar, and I think it's important to continue to watch this on a go-forward basis. Again, if you want to make a play here, you can do so relatively inexpensively, and I think there's value associated with that. As you can see, even the 1 week is relatively high. But if you look at going all the way out to January, there's not much of a difference between 73 cents here for $25 versus the end of this week. I mean, you're looking at essentially nearly 6 months to hit that January price target, 5 months, and it's not that much more of a premium. So it's pretty crazy the conversations we're having surrounding macroeconomics and the value of the US dollar at a time when the economy really is not performing very well. So this is one that I'm going to be watching. Again, gold is one to watch as well. Both of these traditionally do not move a lot. So again, macroeconomic perspective, something to watch in preparation for tech earnings tomorrow. I think if we see one of the tech stocks just bomb or forego guidance, then we may see some additional bullishness on the bond market, the gold market, and some bearishness on the US dollar. So that is my opinion. Feel free to check it out and provide your comments below. If you found this content helpful, please leave a like and subscribe. Thanks everyone. Talk to you later.